What's up everyone, good to see you again. It's River, and welcome back to another video where we're going to discuss something that might have a huge impact on the global economy. Today we're talking about how China is ditching the US dollar for buying oil, and how other countries are following suit. Trust me, you do not want to miss this. So recent news articles revealed that China and Brazil have reached a deal to trade in their own currency, bypassing the US dollar as an intermediary. Now you might be wondering why this is such a big deal, but the US dollar has been the dominant currency in international trade, especially for oil, for decades now. So this move is a direct challenge to the almighty greenback. According to AFP News, the Industrial and Commercial Bank of China and Bank of Communications (BBM) will execute these transactions between China and Brazil. Now this move aims to reduce costs, promote even greater bilateral trade, and facilitate investment. Now last year, China and Brazil had a record $150.5 billion in bilateral trade. That is massive, but it's not just China and Brazil who are making these moves. Axios reports that the US dollar index, which tracks the dollar against a basket of 6 other major currencies, is down more than 8% from its September peak. That's the most the dollar has fallen in a roughly 10-week time frame in over a decade. Now this drop suggests that the markets now believe the worst of the recent inflation is over and the Fed can slow its rate hiking program. But what does this all mean for the petrodollar? Oilprice.com reported that China and Russia are also looking to challenge the US dollar's dominance in the oil trade. In recent weeks, several deals and summits have taken place to undermine the dollar's dominance, and China has been pushing to establish more trade deals in yuan to increase its relevance in global markets, while Russia is turning to trade in yuan due to Western sanctions. Just last week, China and Brazil agreed to carry out bilateral trade settlements in their own currencies, dumping the US dollar as the intermediary currency. This move is seen as China's increased effort to undermine the dollar's dominance, and on top of that, China completed its first trade of liquefied natural gas settled in yuan on the Shanghai Petroleum and Natural Gas Exchange. Now let's talk a little bit about the potential future implications of all these moves. According to an article by Voice of America, China's economy could overtake the US economy by as soon as 2030. This prediction stated that China's GDP should grow about 5.7% a year through 2025, and then about 4.7% annually till around 2030. Now if that happens, China's economy would become the largest in the world. But what would happen if China overtakes the US economy? While there isn't a gold medal for being the largest economy, it does provide some certain advantages for sure. Countries that are dependent on China's economy would take note, and China would have a much better position to advance its Belt and Road Initiative, which is this massive project aimed at building land and sea trade routes through Asia, Europe, and Africa. But the big question is, how would all these moves affect the global economy and the US dollar? While it's hard to predict the exact consequences, one thing is very clear, and that's the growing divide between the US and the West on one hand, and the China-Russia axis on the other. And this could lead to some major shifts in the global financial landscape. So what can we learn from all this? It's essential to keep an eye on these developments and understand how they might impact the global economy, investments, and geopolitics. And it's also crucial for investors to diversify their portfolios and be prepared for potential shifts in the financial landscape. A weakened US dollar could have ripple effects on the global economy, and it might lead to higher inflation, increased borrowing costs, and potentially destabilize some emerging market economies. Additionally, it could make some commodities like gold and cryptocurrencies more attractive as alternative stores of value. The US, in response to these developments, might have to reevaluate their economic policies and trade relationships, and this could lead to the development of new partnerships and alliances in an effort to maintain the US dollar's dominance in global trade. In conclusion, the recent moves by China, Brazil, and Russia to challenge the US dollar's dominance as the world reserve currency, especially in the oil market, could lead to significant shifts. And as these developments unfold, it's very essential for investors and policymakers to be aware of the potential consequences and adapt accordingly. Well guys, that's going to be all for today's video. I'd love to hear what you think about all these developments, and if you believe the US dollar will maintain its dominance, or if we're going to see some new global reserve currency emerge. Let us all know your thoughts in the comments below, and if you enjoyed the video, consider joining the club by clicking that little subscribe button. As always, the articles are in the description. Thank you so much for watching, and hopefully, I'll see you in the next video.